There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
So welcome everyone to, drumroll please, our first of 2022 Saturday software strategy session. And overall, my name is Steve Vetterl. I am the firm's risk manager, for lack of a better term. I was trying to think of a better way to explain it. But I'm just going through here, wanted to take a look at a few things before I go live. But essentially the Forex Factory calendar that you see in front of you, we have a bunch of holidays coming up this week. Do note that if you're ever concerned about like a bank holiday and how it affects your broker, all you have to do is click on, like let's take the US here for instance, you just click on it. Banks are closed, typically in an observance of New Year's Day, which is interesting that the market isn't. So stock market isn't, but banks are closed, and since they facilitate most of the foreign exchange volume, it's not going to be a lot of executing. One of the big concerns I always try to steer people clear of and around holidays is, yes, you can execute trades at whatever broker usually, even if the market's closed, but very often you're going to get unfavorable executions and they're going to eat away your bid-ask prices because of the fact there's lower volume, and they can play games with you at off-market or off-open market time trades, right? So I stay away from that, plain and simple. So, but it is a holiday all week for many people, especially the biggest in this industry. You'll start to see more folks filter back in probably towards the end of the week, at least as far as the big money folks, big hedge funds, institutional traders that back from whatever holiday ski trip they had in Vail, back ready to work at it. Probably see some pretty decent volume. So we'll get into more of that, but do note that Friday is, for what it's worth, non-farm payroll. Normally I put a fair amount of discussion into this, but the fact there's been so much stuff closed and avoided, and just by all the wimps out there that have just closed things for a variety of reasons and freaked out chunks of this population, we're not going to be able to know whether this data with the unemployment rate's worth a crap or not. Honestly, it's going to be like figuring out where all the landmines are in the data. It's just a mess, right? But normally this is an important reading. I'm not sure how much weight this is going to carry. You can see all the actual and forecasts here if you click on it. So just note that I probably won't be trading this whole week. May look at some reallocations in equities, but I doubt I'll be trading any Forex during this period of time, just because there's too much uncertainty, lack of liquidity, issues going on with pandemic. It's really just bringing a whole host of risk-based variables that I cannot accurately address. So that being said, that's the Forex Factory calendar. Let's take a look at the charts. I want to start off with finviz.com, going through just the dailies only. Remember, if you're confused, finviz.com, click on daily and all, and then charts, because I just want to see them in relation to each other, right? You can, in one quick shot, you can look to see what's credit doing, right? Bond markets, US bond market treasuries. What is the currency market doing? US dollar. Notice we had some, probably the second weakest point in this whole liftoff above the rip I've been talking about for like 6 months was going to happen, and rip right up into this new area. Pretty weak on Friday. Can we read into it? No. Was it super low volumes in the market? Yes. How accurate is this particular movement? Probably not very, right? But just note, this is where the dollar's been, euro, JPY, surprising strength in the pound in relation to the euro. I find this to be, if it was taking place during a non-holiday period, to be interestingly decoupling, meaning that other factors look like they're starting to play out, right? No surprise, all the weakness and the reloading of the weakness, if you will, in any rips, you know, they say short the rips, buy the dips, right? But any real major weakness in CAD is just too much been piling into the crowd. What happened? They barbecued all the shorts on Friday, right? Of note, right? And again, low volumes. This is the kind of stuff that can happen if you're not prepared. You know, if you were short of anything related to a major in the Canadian, you got hammered on Friday. Complete and absolutely quintessential example of why I do not trade during low volume holidays, period. So, of note also, Swiss is getting ready to possibly break out above the November high, but we've seen some more strength in the pound, obviously less strength in the US in terms of very recent, more strength in the Canadian, just take that of note. Do note the trending down in both 2 and 5 years. So as the yield curve's flattening, it's less profitable for banks. Well, I haven't seen as much movement quite to the 10 and 30 year in that area. Do also note, I don't know how much we need to note, but you can see how we ripped that holiday rally I was talking about that typically pushes in the last week of the year. Happened again, took us out to new highs in S&P, not NASDAQ, nowhere near in the small caps. As you can see, this is actually a problem right here, right? This is that canary in the coal mine in relation to other equity markets. But look at what's going on. No new highs in DAX or stocks and any of the other 2 indexes that measure broadly in Europe that aren't on the screen, the 600 index. So none of those are breaking out to new highs except for S&P. So what's that tell you? That tells you that there's a big chunk of companies that aren't anywhere near and are far under their 50-day moving average, whereas the top, I don't know, 5, 6, you could argue even 9 companies are so much far ahead that they're propping everything up and making it look unnecessarily, or I should say, deviantly healthy. And it's not. So you always have to start peeling the onion back and looking under the cover to see what's going on, right? That's all I really want to say for FinViz. All right. That's pretty much all I want to say for Forex Factory as well. Let's take a look at the books. I think you all should probably take a look at reading next year. You'll see that probably the first 4, they're all based on inner peace, right? They're all based on calming thy monkey, controlling the psychology of thy mind, right? Understanding thyself. just sound. This is actually a really good book. I know Dr. Chopra, a lot of them think he's batshit crazy, but guy's actually really smart. Certainly Napoleon Hill, Think and Grow Rich. This is about programming your mind, along with Anthony Robbins, to be successful, right? I've often used the example, which I like the best, of early days Michael Jordan, you know, right out of national championship, NC State, just killing it in college, and they won the championship, gets into the pros. They're at their first basketball camp, and everybody's at the line, right, throwing, trying to get free throws, team training, all that. He's sitting on the bench staring at the basketball net, and a lot of his teammates, especially Scottie Pippen, were like, "Hey, no, what are you doing?" He's like, "I'm envisioning myself making free throws." So he sat there for like 20 minutes just thinking about the process. And sure enough, went up the line, nailed almost 50 in a row, right? So the mind is a powerful thing if you can understand how to, not necessarily reprogram it, but put it into a process of thinking calmly, right? We're setting up a system called WealthBox, and in WealthBox, it's a very deep client CRM we're using for our investment advisory and the agency side of our firm, First Down. And as we're beginning to train all of our financial advisors on how to use it, everything is a process for them. So if we're bringing in a prospective client, we're converting, whatever accounts from, an Ed Jones or Merrill Lynch or UBS, and we're transferring them over to Schwab, our custodian for the clients. There's a specific process that needs to play out, literally where they're clicking from one step to the next. And it's very new for many of these advisors. And the reason it's set up is to benefit the client, to benefit the advisor, to benefit our firm, and that nothing is lost, right? Statements are collected, financial planning software is put together for the client, right? So it's an in-depth process that is that I've designed. It's almost like a skeletal framework, if you will, with the assistance of some of the WealthBox guys. So it's taking the best practices of the best investment advisory firms for clients and putting a process together to onboard them without missing a thing. Right. So I would encourage your trading and your research and, to take a methodical process to putting together a plan. The plan could be as simple as a page, right? And your plan isn't, number one, I want to make $1 million this year. That's not a plan, right? That's a goal. How do you get to that $1 million? Part of it's psychological, right? Whether you want to believe that or not, it absolutely plays a part. If you don't believe that, again, risk management, take it into your own hands. I have very little sympathy for the individual that does not put a process together to trade, right? It's just like if you're building a house, right? You want to build a big house. That's what we're looking to do in Florida because we can't find a damn place we like. They're all crap. And they're all 1,600 square feet. And then the opposite side of the equation in Florida, there's a bazillion of houses that are 6,000 square feet and up, right? And we don't want any of that stuff. Something in the middle is fine. So it's a process of building, getting the land, getting the approvals by the county, hiring the subcontractors or the GC to manage subcontractors, and having an architect put plans together, break ground, all that fun stuff, clear out your trees. Hopefully I don't buy some land that's full of swamps and alligators. But outside of that, I think the process of just putting a plan together is just absolutely critical. So I'm not going to drone on to it. Just understand you want to have a plan, right? If you email me, s.vetteral@auvoriaprime.com, I could forward you some of the trading plans I have sent to numerous students over the years. I have plans as simple as 2 pages. I have plans as detailed as 30. So this is the blog I wrote. Our website was just launched. If you guys haven't seen this, I would encourage you to go on the website, learn all about us at First Down. But essentially this particular one, just to keep on the theme, is, is your portfolio stuck in the red zone? This is something we talk a lot about with clients. I decided to have my first blog on the science of returns in your portfolio. So I take hopefully a pretty generic route. Hopefully I don't get too detailed in this, and just explaining how a process works in terms of returns and risk relation to how a portfolio should work out over a period of time. So I think there's a lot you guys can gain. I'm going to try and write 1 blog a month. The Investopedia Award, which is sort of like my crowning achievement, top 100 advisors I won a couple of years ago, they awarded that based upon doing lots of education, obviously, but I also had to write like a weekly and a monthly blog, which I just didn't want to do. It's a lot of work. So, but I'm going to try and get in the habit of that again in terms of, so just hit the website up, hit blog or bookmark or whatever. You guys can follow along on that. Let's go into the charts. S&P, as I talked about, lift it up. Make this bigger. Here we go. So S&P, what's this, 4 days in a row of 1 time framing on much lower volume. See that declining vol, right? So if you have a 1 time framing, which normally would dictate, well, hey, institutions totally making other time frame players are stepping in and taking over, and they're really taking this market to a different area, right? If there'd been a lot of volume to go along with that, it's a solid thesis. This, scrap thesis. Again, more reasons that I talk about not trading during the holidays. Take a look at the cues real quick. I'm not going to drag this on today. Just go through this. Much more to be gleaned from these charts once we get everybody back, and lots of trading volume and lots of good data sets to pull from, and we can pull hopefully winning prognostications out from a macro perspective. So let's just take a look at NASDAQ not making new highs. We got the pullbacks. Anybody that's trading these markets, I would expect them to give back a chunk of this next week. But I could totally be wrong on that, as we're essentially completely going to be juxtapositioning around all kinds of institutional portfolios throughout the first month, right? Does the Fed finally decide to taper? I mean, they keep saying they're going to, but you just look at their purchasing, and they haven't tapered off. So they're still providing tremendous liquidity for all kinds of markets globally, and other central banks are as well. I think a lot of that has to do with, just potentially more lockdowns with pandemic, and certain countries are flipping out about this more than others, even though this whole Omicron crap's really not killing a lot of people. But it is spiking the numbers. But there's also more testing, so you sort of have to look past, well, the junk you hear. Most of it's misrepresented information. Peel back the onion, you can see that they're doing a lot more testing. That's why these numbers are a lot higher. So looking at trying to find what the real story in the markets, let's jump to the dollar. What's the real story? I don't know. But I do know we're going to rip, and we're going to probably spend some time balancing. I talked a lot about that. No surprise. It's typically what happens after a protracted type of move one way or the other, where the markets have spent, a pretty good amount of time. If we take a look at the weekly chart, we can see I would expect, if we do pull back, don't quote me on this, but I'm just getting a feel for it here, probably somewhere near this 94.40-ish, I would imagine would contain this, because this is where we barbecued a lot of dollar shorts. If in fact this was larger time frame players taking this market up into a new zone, more than likely they're going to be protecting it going back down into the lower zone. If we do break through this line right here, right in this area, I would expect this trade all the way to the bottom fairly quickly. Shorts, institutional dollar shorts start piling on. These are typically longer term holders. Take us back down to this area. Right now, dollar, it's the best of all evils. Pound, let's jump back to daily. I thought this was interesting. So we're almost back up into the upper zone. Typically what happens is, if you do a decent base, I'm not sure how I would categorize this as decent, but if you put in at least a little bit of a duration of base, and you pop back up into a previous zone, the argument usually from at least a market or in a volume aggregate perspective is that we're going to trade across the entire value area. So you can see that I'm circling essentially the sort of whole meat of the value area right here. We'll probably trade across against it. So if it does in fact happen, this whole one, essentially just right under $1.40 pound per dollar area could be touched. It may take the entire quarter to get there, but there is a lot of probably folk that will be defending this area. Could be wrong, but if we don't, I'm pretty sure we'll zip past most of this fairly quickly. What does this mean? This means that, don't know that I'd want to be short this in any significant way, with the exception of the Canadian dollar. So we'll take a look at GBP CAD, the NEO currency, here in a bit, because that one certainly is going to be like the battle royale, because there's a lot of Canadian shorts that probably got pretty caught off guard if they were paying attention to the markets on Friday. So let's get down there. And no surprise, right? So we had big rip in Canadian. Notice I always start off with US CAD first, right? Just so I could see what's going on. I mean, it completely ripped against the dollar, sold off. Not much, but that particular major totally tore. It's going to pull back to this area. But notice we're back against a very important support line that we broke out of. And my hope was that NEO was long once we broke out of this whole area. This whole one spot 71-ish area should be support, possibly trade sideways, right? If we break down into that and there's a lot of strength in the Canadian dollar, we're probably going to transverse this entire move. It can happen. These movements are extreme, but if you look back on the chart, especially if we go into a weekly look, make this bigger, you can see back, you know, we truly rejected what I thought was the edge of the cliff. And, you know, we're back up essentially into a long-term base, but we're right around the center point right here. As you can see, we're basically on it as far as this whole move. You can even argue, you can go back further if you want, but this blue area, this darker shades, it's called the value area, 70% of the volume, high-low. But the center point's the point of control, we're right on it. Could be spending some time around it. It could offer itself as support for a move higher. That would be mostly based upon the fact that Canadian dollar is weak. Let's see. I think the interesting thing in all of this is that gold has not been acting quite like I would have thought it would. Now we're looking at a weekly chart here, so let me just jump back to daily. We could see we're up against the upper area that I would have expected us to at least rip to as the dollar sells off. Whether we'll get into this upper zone here, we got into it, came right back out of it. So that tells us that when we go back into this area, it'll be interesting to see if let's just say set amount of group of institutions to be defending this or not. I like to look at spot, but can also look at GLD for volume. See where the hold points are as far as the center line. This whole 1600, 600-ish, or 1600 60 ounce is support so far. What else do I want to talk about here? Euro GBP, the edge of the cliff. No surprise, euro's been weak, pound's been strong, but this one spent a long time in this area. If we go to the weekly chart, you can see how long we've spent in this area. Years, right? The true edge of the cliff is right down here. Not a lot trade this, so I don't spend that much time on this. But if you do see this start to break with continued more strength in the pound, this thing could sail down to this area pretty quick. Be interested to see if it holds. Euro CAD, like I talked about. No, I'm sorry. Euro, US dollar. Look at this one as well. Daily. So a little bit of weakness. Notice if you turn this chart upside down, it's basically the dollar for the most part. Almost looking at almost like an inverse correlation charts setup. Could possibly break higher. We're right on that line though, right on against resistance, just like the dollar's on support. So it'd be interesting to see if one breaks for the other. You note that it's possible you could actually short that rip up, but I just don't see the dollar going down. I don't know. I mean, you know, if all central banks start changing their tone, which may change faster than they're talking about, The currency and the credit markets will be the first ones to get whiffs of that, and it will be swift. So just be on alert. GBP NZD, just for purposes of viewing. AUD NZD, AUD CAD. Man, these are all daily charts. I think that's pretty much it. So if you had problems, looks like we had a couple people say that some sound issues. They'll get this recording done, be up in Vimeo, obviously. And I don't know if they're putting it on YouTube or not, but it's obviously you can click right to Vimeo from the AP Live groups and go in and see that. I'm actually going to cut and paste a few things, do some notes right now, and I'll post those as well. So if the team's got nothing going on, tell them, hey, Veteral's done. Hopefully these guys will have the recording rendered and up by at least Sunday afternoon. So that's why I figured I'd do it earlier today. But Happy New Year, everyone. I wish everyone a safe couple of days, and let's get ready to rock towards the middle of next week. See y'all Tuesday.